I just found out my mic was muted. How about now, Crystal? Good. So let me just recap that. And thanks so much. Yeah, we have a little bit of a technology error here. So just to recap what I was just going over, my name is Robert O'Keefe. I'm the creator and founder of Over 55 NJ. We help people make educated decisions on their downsizing needs, relocation moves, and things of that nature. We encourage you to reach out to us and get in touch in advance. Probably the average where customers reach out to us are probably 1 to 2 years in advance. So feel free to reach out anytime and start to get some ideas. We want to say too, we have a great Facebook group, which a lot of you are a member of. It's over55nj.group. And this is a great place to go just to get some ideas, to start collaborating, to start discussing, to start getting ideas. We welcome you to join our group, ask questions, collaborate, network with one another. A lot of people you're going to find are in the same boat you are and have the same questions. So, that being said, we have a very exciting topic today. One of my personal favorite topics is the liquidation and tax strategies when it comes to real estate liquidation and things of that nature. I'm going to give you some ideas. I'm going to give you some things that you may not be even aware of, and just some things to know as you start planning ahead for your liquidation. Now, quick disclaimer, we're not tax professionals, we're not financial advisors. This content is for entertainment purposes, and we always recommend that you consult with the correct professionals. This isn't official advice or any recommended courses of action. So let's get into it here. Let's bring up the slides, and we'll start going through the presentation here. So got a beautiful slide here for you today. Tax considerations for downsizing, capital gains, property tax, and more. So capital gains. So on the very basic way to think about a capital gains tax is the money the IRS will collect whenever you sell an investment. So the IRS says, hey, you made some money on this investment, whether it's a stock, whether it's a piece of real estate, Bitcoin, really anything. The IRS says, hey, let me get a piece of that investment. Usually it hovers around 15%, which is a large chunk of change. So you want to minimize these taxes as much as possible, especially when planning ahead. Let me just go through the next slide here. So we're going to give you the top 3 tax considerations when downsizing. So number 1, capital gains tax. So this was a lot of people don't know about this law, but there's a great capital gains exclusion for your primary residence. So the rule is you must have lived in the home for 2 of the past 5 years. So a lot of times we speak to people, maybe they want to make a change, maybe they've only been there a year or so, maybe life takes them in a different direction. And we always say just wait a little bit longer to list the house because you're going to save a lot of money on capital gains, especially the way this market is moving. So the way it works is it has to be your primary residence and you've had to live there for the 2 of the past 5 years. If you do this and meet these 2 caveats, if you're a single person, the IRS will let you exclude $250,000 of your capital gains. So mean if let's say your house went up $50,000, you wouldn't be entitled to pay capital gains on that 50,000. And if you're a single person, that gain's capped at 250,000. So on the other side of the coin, if your property tax went up to 300,000, your capital gain would be $50,000. So 300 minus 250 is 50,000. So your gain essentially would be 15% of that $50,000 increase. So for married couples, it gets better. The capital gains exclusion is 500,000. So if your home, some homes we sell, believe it or not, have gains much higher than 500,000. You know, some of these properties have been held in the family for years, 20, 30 years. So a lot of people, believe it or not, have gains above the 500,000. But with that limit, 0 to 500,000 in your gain, you wouldn't be entitled to pay capital gains if you're occupying that property. So very, very important, and a lot of people don't know about this. We have clients that work for Goldman Sachs, Facebook, Amazon. These are very highly educated people, but they don't know about these rules. And the reason is nobody told them about it, as simply put as that. So we have a great opportunity just to really reach out to you directly, talk about relevant information that you care about and relevant information that actually affects your bottom line. And we're honored to be a resource for you there. So that's the big one for capital gains. Now, if your home is an investment property, it's a different story. We would have to do some advanced planning there to avoid a capital gains tax. There's methods we can use, such as a 1031 exchange. We've helped clients too. They've had 2-family homes, 3-family homes. Some of them have occupied it. Some of them they've occupied. Some of them they've just had as investments. And then we help them trade into different assets, assets that are much easier for them to run. We were speaking to a woman that manages her own properties, and she's basically tired of it. So we're actually going to help her with a 1031 exchange into a solution where she's hiring a property manager, so she's not paying capital gains, and her property is going to be much easier to manage. So this is very important. You always want to look out for taxes. Taxes are always going to be our biggest expense over the course of our lifetime. So whenever possible, you want to be planning ahead for this and just making sure everything is aligned before you start planning a real estate move. And we can help you out with that. The key is just getting started in advance, and feel free to reach out to us to do so. Now, the next one is property taxes. So property taxes can be reassessed at any time, really. New Jersey, generally, we always say the property taxes tend to go up. So for your purpose, you want to make sure you're buying into areas and communities that are very fiscally responsible as much as they can be in the state of New Jersey, and just make sure they're financially sound. So what we do is we run a tax history before you buy in any community. We can look at the history of the taxes in the area and the community. We can kind of ballpark where the taxes are going and just start to go from there, and just make sure you're buying smart. We always say plan to budget and plan to taxes on going up, but you want to make sure you're not buying to communities that have a lot of volatility. Quick story about me: we had a condo in Hoboken, and sometimes, like all people, we go through regrets saying, maybe I should have kept this piece of real estate, maybe I shouldn't have sold it. News came out today, they may increase property taxes by 20%. So in that case, it might have been a good decision to sell it. So even as a professional, I go through these kind of ruminations too, of just going back and forth, and kind of helps talking to someone and talking it out and putting it on paper. But the point of that story is you just want to make sure you're buying into strong communities and make sure that you're budgeting ahead for any property tax increases. But most importantly, just buying smart ahead of time and doing your research and making sure that research is well grounded in data and very careful planning. Last thing is my favorite is timing, proceeds, and financial planning. So it all bakes into the cake. We were speaking to a gentleman relocating from Staten Island, and his mortgage and house was all paid off, believe it or not. We work with a lot of people that are in that fortunate situation. They're starting to explore communities, starting to do a little research, and we were actually running numbers for them based on their new monthly payment. And even with a $430 HOA, his monthly expenses would be cut in half. And that's even without a mortgage on his current primary house. So it's amazing. So he's going from a house that he has to take care of to a little townhouse solution where he's paying half of what he's paying and no maintenance, no snow, no nothing. A lot of that's a welcome sign in this tough winter we're having. So there's a lot of great solutions like this. Everybody has a different situation. That's why we welcome you to reach out to us. We're always available to consult with you on your situation and start to put you in touch with the right people, whether it's within the state of New Jersey, which we can help you with. Maybe it's a referral partner we have that can help you get an idea of what your home is worth elsewhere. And maybe you're looking to move across the state, maybe to a different state. We have a huge network of professionals that can consult with you in a non-pressured way and just really help you make a solidified plan in advance. So that being said, quick topic today. We're just going to the basics here. A lot of this has to do with your individual situation. So we invite you to reach out to us. Reach out to us at over55nj@gmail.com. Feel free to send us a text or a direct message anytime. And if you have a topic, of course, that you want covered, we always invite you to reach out and ask questions, because we'd love to put on the production for you and answer your questions and be your go-to resource. So make it a great day. We'll see you on the next video. Have a great rest of your week. Good weather is around the corner, and we'll see you on the next one.